On our last session, we spoke about premium and discount levels and how best we can use them on a bullish or on a bearish market. We said, say we're in a bullish market, what we are looking forward to do is we are looking forward to be buying from the discount levels. And if we're in a bearish market, we are looking forward to be selling in the premium levels. So what we do is we mark our high and our low, and we expect to be buying from the discount level so that we buy when price is cheap. And then if we're in a bearish market, we want to be selling off from the premium levels. So let's say this is our downtrend. We want to be selling from the premium levels so that when we sell when price is expensive, right? And I think I explained why price gets cheap and why price gets expensive and how we profit off from that, right? So now that we know that there is what you call the premium and the discount just as much as the discount and the premium. What we now need to know is from this point onwards, we want to go a bit further inside and try to see where we can get some entry points and what we can say can be a best entry point. So today what I'm going to be talking about, ladies and gentlemen, is the Fib, right? And I understand that most of us, we don't know what a Fibonacci is, right? So a Fibonacci is a retracement tool. And where it helps us at the end of the day is, let's say we are in an uptrend. Like I taught you, we have what you call an impulse and a correction. We have an impulse and a correction. Right. So at the end of the day, we want to catch our trades at these areas over here. The best places where we can get or catch our trades is just when the trade starts retracing, meaning that the moment we create a low, or yeah, the moment we create a low, this is where we are willing to be taking entry points, right? I understand there's a lot of people that want to be like, okay, this is my market structure, giving me highs and lows, highs and lows, highs and lows. And they would want to wait until they get a complete trend reversal. But then remember, when you open the charts, it's not always where you are going to see it at a point where it's now starting to give you a complete reversal. You can open your market and see that you are at this stage or at this stage. So this is why I believe that as a trader, you're supposed to get an entry at any given point in time where when you open your charts, right? But when I say at any given point in time, I don't mean like you open your charts and then it's looking like this and then you just buy from here. Why? Because it can retrace, give you a low, and then go up. So at the end of the day, you also need to be cautious and you also need to use patience as you move. So now, when we create a high, when we create a high and a low, right? And let's say we've created another new high. What we are most interested in, we are most interested in knowing where the next low is going to be, right? So according to what I taught you that we have the premium and the discount level, right? So this is our premium. I'll mark our premium and our discount levels, right? And assuming this is our 50%, right? I might not be very precise on this one, but I'm assuming this is our 50%. Yeah, it's here. So this being our premium and our discount, we know that the low that we're expecting is not supposed to be in this area, right? Why? For clarity, why? Because what I can do, let me just do this just a second. This is our premium, sorry, it's supposed to give a text box there. This is our premium, sorry. What's happening? All right. So this is our, oh, it's not allowing me to add text. I don't know why, but let me just use this one. So this is our premium. And then this is our discount over here, right? This is our discount, right? So now what we know is, since we're in an uptrend, we are not expecting a low in this area to buy, right? We are not even expecting it at this point. Sorry, we are not even expecting it at this point to say that we have a low and then it just goes up. What we're expecting is for price to come and get in our discount level. But now the problem is, since we now know that it's supposed to get in our discount, but the problem is, where exactly in the discount? So we are now treating our discount like another zone. Where exactly in our discount level are we most likely to what? To get a reversal. So what I'll do here is I'll show you a tool that is called a Fibonacci. And a Fibonacci, like I said, it's a retracement tool, right? So let me just come here. A Fibonacci is a retracement tool, right? Meaning that it measures when a retracement, when a retracement is most likely going to take place, to end and reverse, or continue with the trend, right? I don't think there was any necessity for me to type this, but I know someone is going to be watching this from YouTube at some point in the future, so they might want to pause and just look at this. So a fib, right? So let me do this. So a Fibonacci now, it has different markings or points, right? And as you can see here, this is what we call a fib. So when you open it, let's say you go to your MT5, this is trading view. I like using trading view a lot because I can chart clean, right? So I would also recommend you to just download your trading view or have trading view. If it's for derive now, there are two types of trading view. But oh yes, I just said derive is now on the actual trading view application, which I'm also going to look at and confirm with you, right? But assuming it's not, you can just go on your web browser, then type derive trading view, and then it will pop up, right? So when you place it, what you're going to see is it's going to have different points, right? It has this 0%, it has this 0.236%, it has the 0.32%, it has the 0.5%, it has the 0.618%, it has the 0.78%, and it has the 100%, right? Which in here is 1, right? So this is 0, and whatever happens in between, and this is 1, but this just means 100, right? So before we go any further with the fib, I would want to customize this while we look at it. So the whole idea of the fib is to get retracements at the 0.5, 0.6 or 0.1%, which I'm going to add. This means when, say, we are in an uptrend, right? We are in an uptrend. Where we place our fib is we place it from the low to the high. So like in this case, we can come and we touch our low and then we drag it going up. Since we are in an uptrend, we pull it up in the direction of where the trend is going, right? Now, most retracements, we expect them to happen around the 0.50, and this is where the discount starts, right? And let's say we're in an uptrend, this is where the discount starts. If we're in a downtrend, this is where the premium starts. I'll show you the example of a downtrend. So we're expecting retracements to happen around the 0.5, 0.618, and the 0.71%, and then continue to go up, meaning that we're supposed to be having a new low around that area, right? So there are other levels that are not really useful for us to learn. So I'll remove them with you so that in the future, whenever we do a lesson on the fib, we don't include them, right? We don't need the 0.38%, 382. We don't need the 0.236%. We don't need it, right? And we also have these other extended levels. We can leave them. I'll teach you about the extended levels. So at the end of the day, our Fibonacci, what you're going to see is it's going to have the 0.6. I've removed other levels in between with the 0.5, 0.618. Now we need to remove that 0.78%, right? And we need to add what we call the 0.71%. So as you can see, we don't have the 0.78%, which is down there. We have the 0.71% there, right? So the whole idea now is, I think we have too many colors over here, but I think this is something that you can do as per your own liking if you just want to change color. Because at the end of the day, if you have many colors, it would be hard for you to navigate your way through, right? So let me just try to put a color that's common so that it doesn't affect how we see things over here, right? So I think we can all see that I've changed all of these to gray because I'm not used to those other colors, right? So what you see here is at the end of the day, as we have the 0.68, the 0.71 there, and the 0.78, the whole idea, let me remove all this. The whole idea now is to say, let me remove this. We'll come back when there's, oh, sorry. We'll come back when we don't have any more noise. Right. So the whole idea is when a trade, okay, just a second. All right. So when a trade retraces, we're expecting it to retrace around these three markings, which is the 0.5%, the 0.618%, and the 0.71%. Right. And now, if we say, let me remove that. And now if we say we have a trend, so let's put a trend like this. Let's say now we're in an uptrend. Let's say now we have a trend and that trend is an uptrend. The proper way of doing things would be we want to see a high, a low, a high, and let's say we are not sure where the next low is going to come, right? The next thing that I'm going to do is I'm going to add my premium and discount levels. And I think by now we've trained our eyes to know that 50% of this box is premium and 50% is discount, right? So after doing this, I can either remove the box or let it be there. What I'll now need to do is, since now that I know that I'm in an uptrend, I come and I touch my low. I want you to get this, guys. I've seen many people teach the Fibonacci wrong, whereby they touch whereby, let's say they're in an uptrend. What you see them doing is they just come and then they touch the high and then they go to the low. At the end of the day, you're going to have bad entries. If you place your fib wrong, you're totally bad entries. You're going to lose your money, right? So you touch your low, then you touch the high. Now, as you've touched the low and you've touched the high, this 50% here that we see, the 0.5%, it also can help you demarcate premium and discount. So as to say, anything that's above the 0.5 is premium, anything that's below the 0.5 is discount. Now, I want you to listen to this. Since we just started doing entries, I just started teaching you about entries. When you see this, at the end of the day, you want your market structure in smaller time frames, right? So let's say this was our H4. Straight away, what you do is you move to your smaller time frames, right? Let's say you move to M15. I understand we're doing this on an M15 chart. Just ignore the whole fact. I'm teaching as if this is H4. That's why I'm drawing. So in your smaller time frame, obviously you're gonna have a change of character and a break of structure. So what you want to see in your smaller time frame when you're having that pullback, remember this pullback is the retracement, and the Fibonacci is a retracement measuring tool, right? So we want to measure where this retracement is going to end, right? So we want to see a proper market structure in our smaller time frames. And what I mean by that is we want to see our smaller time frames giving us a low, a high, a break of structure, a low, a high, a low, a high, a low. Although this is not a break of structure, I think we can see that from here it is a change of character, right? But anyways, it's fine. A low, a high. So it's either when we approach the 0.5 or the 50%, we're supposed to see another break of structure or change of character and then a reversal. Or as we approach the 0.6, we are supposed to get a break of structure or a change of character and then a continuation. Or as we approach the 0.71. Now, someone might ask, where exactly does the retracement happen? It can happen between these three levels, the 0.5, 0.61, and the 0.71. But now what's most important is there any change of character or break of structure at any of these particular three levels? That's what matters the most. So often I see people getting it wrong, and what they do is they just want to say, oh, my trade has reached the 0.618%. So straight away they start buying. But then when they buy, let's say I want to create a scenario that's very possible. You can have a high, a low, a high, a low, a high, a low. So someone says as soon as it taps on the 0.618%, they buy. But at the end of the day, remember, a smaller time frame is its own market structure. It won't come and break the high. It will decide to come push on to the 0.71% and then give you a breakout structure on this high over here, right? So your breakout structure and your change of character are going to be your main best friends whenever we start what? Whenever we start reversing trends, whenever we want to start taking entries, those are always going to be your best friends, and those are always going to be your confirmations. So you learn that throughout this course, you will not enter a trade without either a break of structure, or a change of character. The most important thing and the most important weapon that we have is having patience. And if you don't use that patience to your own advantage, what you see at the end of the day is you end up losing trades. So any trade that you enter needs to be confirmed. You need to have a strong confirmation so as to say, I'm now entering this trade. You can know that a trade is supposed to be playing there and there and there, but as long as you don't work with the confirmation, trust me, you always lose trades or you always have early entries. So if we now come and want to do or look at the actual chart, um, as for me, guys, sorry, I like looking at charts using the most recent price. I hate using things that happened before. That's why I usually like telling trades when we are doing these lessons. But anyways, let me just look for another pair here that can give us something that is happening in real time so that we can work on it. All right. Anyways, let's start by doing this. Let me do this actually. I think this will help us all. So what we can see here is we have this market structure, which is giving us highs, lows, highs, lows, highs, lows, but it's more visible if we go and look at it at an M5 perspective. So let's switch to M5, sorry. So let's switch to M5 and come back exactly at this point. So let me just put a box so that we know that this is the point that we're talking about. And let's go to M5. I'm thinking that this is one of the best places that you can see when a Fibonacci played out, and we can all see together, right? So let's say we're looking at this here. If we mark, what you see is you have a high, you have a low, you have a high, you have a low. Again, if you go up, so we are saying you have a high here, you have a low, you have a high here, you have a low, you have a high here, you have a low. So if you take a fib and let's say we just come and mark this place, let's mark our highs together. All right, I think I've seen the problem. Let me just do this. Let me just do this for the sake of it. I don't know. Oh. Well, anyways, it's fine. I don't know why it's confusing. So what you see is if we come and we take our fib here, we place it on this low and we place it on this high. What you see is when we had that retracement, since this is our high, our low, and this is our high, that retracement came and it reacted on the 0.71%, and then it went up. Now, what that means is this is now our new low, and this is now our new high. So if we take a fib and we place it on the new low and the new high, like this, what again you see is that trade, when it bought, it came retraced on the 0.71% again, and then it went up, right? So this means this is our new low here, and this is our new high. If we take a fib again, that same fib and we we have a new low here and a new high there. So if we take a fib and we place it again, this time what you'd see is price came and it reacted on the 0.618%, right? So what I want you to just put in your mind and to be confident on is you can see that price is reacting on either one of these levels, 0.5, 0.618, and the 0.71. And if you are not really getting it again, we can look, it's not always about the trade being in an uptrend or, that kind of stuff. But what you can see again here, let's say we come on obvious points. This is our low and this is our high. If we take a fib and replace it, what you see is our trade, it came in, it retraced on the 0.61% over here, right? 0.618% over here. Again, if we move up with it, let me just place this here so that it won't confuse you. What you see is, again here, like here, we have a new low here. This was the high to the low. And then now we have a new low here. And again, a new high. I skipped this low and high here. So let it not confuse you. And we have another new high there. If we take a fib, what you see is we touched from the low to the high. Where did the trade reverse? It reversed and reacted on the 0.5%. And then it went up. So before I continue, is there anyone who's getting confused with this lesson or what I'm saying? Is there anyone who's getting confused? Or is there anyone with a question actually? Anyone with a question? Anyone an imvunzo, guys? Anyone with a question? All right, we have a question from K. I've unmuted you.
Thank you so much. So now, which is the level to take trades on? Since you said initially you said you should take them at 70, 71, but now we are seeing sometimes it comes to 50, other times it comes to 61.8. So which is the proper level to take the trade?
All right. I'm not sure if you got me when I said let me just wrap this off. I'm not sure if you got me when I said either one of these. So let's put a fib aside here. When I said either one of these, we take trades either between the 0.50, the 0.618, or the 0.71. What now counts is, did your market structure shift on the 0.65% or did it shift on the 0.6% and give you a breakout structure, or did it shift on the 0.71% and give you a breakout structure? So any of these are valid, but what matters the most is your market structure. Did your market structure play? So your market structure is the one that's going to be acting as your confirmation to say, all right, we have a high, right? And sorry, let's say we have a low, right? And we have a high. So we want to retrace now. Now your market structure is going to be high, low, high, low, high, low. If you get a breakout structure from a reaction that comes from the 0.5%, it means your 0.5% for that trade is the one responsible. If you get a breakout structure from your 0.61%, it means your 0.61% is responsible. And how do you know that it didn't give you a breakout structure on your 0.5%, obviously you're going to have your market structure. And let's say you tap on the 0.5% and you fail to break a previous high. Obviously, you have a broken structure, but it means you're still continuing to go down up until you get to a point whereby, let's say, in this case, you tap on the 0.61%, you get a break of market structure. That means you're now going up. So at the end of the day, the overview of how your market is going to be looking like is you are seeing, let's say, this trade from an H4 perspective, right? It's gonna be straight lines, high, low, high, right? But the moment you now want to start looking for your entries, or you want to start looking at where your retracement is gonna end, so we've marked the high and the low. Let's say this was your H4. And now you switch on to M15. Obviously, your M15 is not just going to be like this, straight like this. If you switch in your M15, it's going to be high, low, high, low, high, low, right? So when you switch in your M15, the first thing that you would have done on your H4 is place your fib. You don't place this fib in your M15. You place it in the larger time frame that you are taking your direction and structure from, right? So obviously now when you come in, you tap in the M15, it's gonna be high, low, high, low, high, low, high, low. And from what I taught you that when we're in a downtrend, if you now, let's say, break a high, you've broken structure in that smaller time frame. And if you break structure in that smaller time frame, it means that it's now a chain reaction that is going to happen, right? You're now continuing to break structure going upwards in the larger time frame. So you would want to say you have your high, your low, your high, your low, your high, your low, your high. You come, you tap on the 50. Immediately you come, you tap on the 50. What you have to wait for is, do you now have a breakout structure? If you don't have a breakout structure, what does it mean? It means your trade is gonna come by, right? And then fail to break that high, and then continue going down. If you come and then you tap on the 0.61%, the 18%, you're not going to buy it straight away. What you want to see is your change of character again or your breakout structure. If it comes and it breaks your structure, then now it means that your entry is now available, right? So you can take it. But then at some point, what you see is to fail, right? To come give you a high and then a low, and then either it will come in react on the 0.71%. Now at the 0.71%, you'd want to check if, do you have a breakout structure? No, I don't have. If you don't have a breakout structure, you're not gonna buy it. Why? Because it has probabilities of saying it can come give you another new high and a new low up until it gets to a point where it breaks structure, and then after breaking structure, you now know that you are now having highs and lows, highs and lows, highs and lows. But now if you switch back to your H4, this whole move of going up and down in M15, what it's just going to be looking like is it's just going to be looking like a straight line, right? It's going to be a low and it's going to be a high going up. Do you have a question?
Okay. Thank you so much.
All
It's
right.
very, very clear now.
All right. Questions? Any other question? All right. I see no other question. So what I'll do is we'll try to spot some few entries together, and as we try to to spot some few entries together, let's remember you also need to train your eyes to be looking at these, right? This is the moment when the reality of trading starts kicking in to say, this is how we now start taking trades. So like I said, we don't have another question, so for this session, we can just call it a night. And if there's anyone with questions, please feel free to ask in the group where you're not understanding. It shouldn't be like just because we've learned a lesson, we go, we sleep. At the end of the day, you also need to go learn on your own and then try to figure out some things, try playing around with the charts and stuff. So for today, we call it a night. I'm going to upload this session on YouTube. We'll go rewatch it there. And then if you have any questions as well, please feel free, leave some comments in the section, some questions in the section, in the comment section, I mean, and then I'll always be free and glad to assist. Thank you.